It's a good thing to have a paid-for house. As a matter of fact, it is a great thing to have a paid-for house. I've done detailed research, in-depth research, and we have discovered that 100% of the foreclosures occur on homes with mortgages. The borrower is slave to the lender. Get your house paid off. So any other money above our 15% going into retirement, above saving for kids' college, any other money that comes to us, we're dumping it on the home mortgage and knocking out the home mortgage as fast as possible. Can you imagine how wealthy you would become and how fast you would become wealthy if you had no home mortgage? Oh, I gotta tell you, it's awesome. As soon as you pay off your mortgage, take off your shoes, walk through the backyard, the grass feels different under your feet.
The daily balance on a typical mortgage stays high and stays the same for the entire month until you make your payment. And a large chunk of your mortgage payment goes toward paying the interest on that loan, and only a very small portion goes toward reducing the loan balance itself. This then gives you a new daily balance for the following month that stays the same until you make your next monthly payment. Here's what happens to our $250,000 mortgage over the years. After 5 years, 10 years, 15 years, after 20 years, we would have paid more than what we borrowed and still owe more than half of the original loan amount. After 30 years, the total payments on our loan will be over $500,000. That's because along the way, it will also cost us almost $283,000 in interest. But the real cost of this $250,000 mortgage for the average family is over $730,000. So if you have a 30-year mortgage right now, the real cost to you is almost 3 times what you borrowed. Another way to look at this is that you're really being forced to pay for 3 houses with your hard-earned money. 1 for you and 2 for the bank.
Now what happens is, right now, all banks front load. That's exactly how the bank makes their money. And if they tell you anything different, they're lying. So what happens is when you, let's just say for example, you took out a mortgage and it was for $100,000. $100,000 will equate, if you paid them exactly what as promised, you will pay them $300,000 for that loan. That's how they make their money. So in other words, you give the bank $200,000 of free money.
There's a couple of different things that you can do to actually pay off your mortgage faster. One of the things is to pay weekly or bi-weekly as opposed to monthly. Now that's actually a really big aspect of paying off your mortgage faster, because when you make weekly payments, your balance gets brought down faster, so you're paying interest on a smaller amount for a shorter period of time. When you're accruing interest keeps going and going and going. When you're making weekly payments, you're bringing your balance down, your principal balance down. So it means you're paying less interest on that amount. So in reality, your monthly payments are not actually any bigger or smaller. Now, the other option that you have in this case is to make prepayment options. So for example, at the end of every year when you get your tax return, you could use that money to put down towards your principal balance. So again, you're paying less and less interest. So I paid off $30,000 and it shortened my amortization by about 20 years.
Once you have a home that you know you're going to stay in for the rest of your life, it is your #1 priority, in my opinion, to pay off the mortgage. Let's say your monthly payment is $1,200, like we said. If you just send in an extra $100 a month, take whatever your mortgage payment is, divide it by 12. In this case, it would be $100. Send in $1,300 a month rather than $1,200. You'll take a 30-year mortgage down to 25 years. If you want to send in more, you can. It doesn't take that much more.
You've got a fat month, you put in more. You've got a thin month, you put in less.
Yes. Here's how it's going to help you. When you retire, you're not going to have to make a mortgage payment, so you don't need as much money in your 401k plan because you paid off your mortgage.